Welcome to my weekend market recap, 24th February 2024. That's a nice date, isn't it? 2424. In the last market recap, I mentioned that I would show a photo from my recent trip to another province in Thailand. This is a photo that I took on my recent trip. How did I take this photo? I saw a number of people. You can see few of them in the back of the pickup van. Earlier, they were plucking tomatoes from the tomato field here. This is the river bed of Mekong River. The river is here. They were plucking tomatoes and the pickup was parked here at that time when I first arrived at the location. I noticed that there was no way on the right side for the pickup to go. So it had to follow this road to come out of the farm. So I set up my tripod, put my camera on the tripod, put my focus in this area, decided the exposure and waited patiently for the pickup to start moving, follow the earthen road. The moment it was turning around this corner, I took the picture. I knew that the backlit situation will result in some sand cloud. The sun was setting somewhere here. This is an example of a picture where I was anticipating something to happen and it was highly likely that it would happen. The pickup had to come out after plucking tomatoes. The only way to come out was this road. So I was able to be ready and click my shutter right at the point it crossed the corner. In trading, often using queue systems, we are able to anticipate that something is going to happen. Just like I could anticipate that the pickup was going to come and cross this corner. When we are able to anticipate, we get ready with everything, and the moment the thing happens, we take the trade without overthinking. That is a case of trading or taking photograph where we are ready in advance. Let me share another photograph. This second photograph I took while I was going out from my home in the evening. I often do that in a three-wheeler. I live in a village in Thailand. I was going out on my three-wheeler and that was near the evening, so I knew the sun would set soon. But I don't know which exact day we will have a clear view of the sunset. In any case, I took my camera with me. As I was traveling on the red clay roads, I noticed that the sun was just about to go down behind these distant trees. I had only a minute or two to take the picture, but there was nothing to frame the sun. So I hurried in my three-wheeler. When I saw this field with these trees, I stopped, rushed into the field behind the trees, framed the picture and took the shot. Here I knew that the sunset was going to happen, but I was not sure exactly how I will frame the picture, whether it will be a clear sunset or not. But of course the sunset had to happen and I had to carry my camera with me. There are traits like that as well, where a market may be overbought and we may expect it to come down. We don't know when it will come down, but we may expect it to come down. So every day we may look at the market at the opening hours, and if we have a shorting opportunity in an overbought market using systematic approach, we take it again without overthinking. In both the cases, whether the trade would result in a profitable trade or not, in my view, that does not matter. What matters is following a systematic approach and following risk management. I'll try to share two actual trade examples of both these situations. That will come later. Greetings, I'm Sagar Nandi, retired IT professional, a common man really, swing trading stocks for a living, trading in the USA as well as India markets using the Q systems and techniques that I developed myself. You may contact me using my email ID info@superiorprofit.co or tradingprofitably@gmail.com. I regularly share high probability trading ideas. Why high probability? Because I tend to align technical forces with market forces, with sector industry rotation forces, as well as fundamental and sometimes seasonality forces with my trades. Because I try to align all these forces in favor of my trades, they tend to be truly high probability. That makes sense. Everything that I do in my trading is about common sense, nothing earth shattering. Just applying the common sense approach and without overthinking. I share those ideas regularly on my website superiorprofit.co. It has a trading ideas forum. I share there, or X handle Superior Profit, and these YouTube videos, and sometimes I make other videos as well, trading profitably. All these channels are open to the public and you are most welcome to make use of them. Disclaimer, this demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. Options trading can be risky. You may refer to the characteristics and risks of standardized options document from OCC to decide if options trading is suitable for you. Q Systems has many components. All the components run on the Metastock platform, and if you are trading in the USA market, then the technical analysis component runs on TradeStation as well. Let's look at the market now with these trading systems. Well, I came to TradeStation first and I have a chart of SPY. Let's start with that. SPY made a new all-time high this week. Major part of the up move was on this day, Thursday. That was after Nvidia earnings. Interesting, isn't it? How a single company's earnings can make a major rally in the whole market. We will see that other parts of the market also rallied, apparently from the result of a single company. Amazing. And that large move has not happened in a very long time. That large move made another new all-time high Thursday. Friday, price started to go up, opened up with a gap up move, pulled back, but still closed higher. We also noticed that on Thursday, that big up move happened with big move up 3 when price is already at price extreme high. That is a overbought situation. Price is jumping up at overbought situation. I don't like to buy there. Is it bullish? Clearly bullish. Is it overbought? Evidently overbought. Let's look at Dia. Dia also made a new all-time high. If we look at the backdrop color in weekly, Dia is clearly weaker than SPY because the backdrop color is yellow, and we can also see the relative performance is steadily coming down, underperforming SPY. But it made a new all-time high. Again, that new all-time high was made on Thursday. Friday again it opened up, closed lower but closed positive. Closed lower than the open but still closed positive compared to Thursday. For the week made a new all-time high. Overbought clearly so bullish, no doubt about that. IWM. Here the picture is distinctly different. There is no all-time high. There is no even recent high. Moving inside a range, the range is created by watermark resistance at the top, trendline support, watermark support at the bottom. See Thursday's candle. When SPY dia shoot up hugely, it made an indecisive shape candle with higher and lower tails. The same happened on Friday. Small caps are not participating in the market rally. And that was happening for a long time, not just this week. Small caps are underperforming. And now let's come to QQQ. But before I come to QQQ, let's look at, you will see why I'm shifting from the external ETF view to the market internal health check in a moment. You will find that out. This is Q market breadth total view. Notice on Thursday and then again on Friday what we have. We have the Hindenburg Omen. Interestingly, Thursday was a very bullish day in the market, especially for DIA, SPY, QQQ. But we had an Hindenburg. What did it mean? It meant something that I shared on my X page. This is what I am sharing on February 22nd. This is the custom total view index, the index of all indexes, a broad index for the USA market that was up, and the trend line support held again in weekly as well as daily. In fact, if you observe my if you viewed my last week's market recap, I mentioned that unless these trend line supports are broken, the supports were and still are there not only in this total view but in individual ETFs and futures as well. Unless they are broken, it is not the time to take shorts. So it is not yet take time to take shorts because the trend line supports are still holding, as is true for the total view as well. And I noticed that total view also had a big move up 3 at price extreme high. Bullish, of course. Overbought, yes. Then I looked at the Hindenburg coming on Thursday. Where did the Hindenburg fire? It actually fired in Nasdaq. What was the reason for Thursday's up move? Apparent reason was Nvidia's earnings, that is a tech stock. QQQ had a massive jump of about 3%. Mega caps had a massive jump of about 6%. And at the same time, we see heavy selling in Nasdaq, represented by Hindenburg. Why was it important? Remember the second picture I showed. Every chart, every breadth indicator was telling that the market was overbought, and that professionals started to sell the technology stocks at the very top using the news of Nvidia's earnings. Remember the second picture. I knew that it was overbought. I knew that the sunset was going to happen. I didn't know if I would have a clear picture, just like I didn't know if I would have a short setup. But I was looking for a short setup in QQQ on Friday for day trading. As I mentioned earlier, when market is at all-time high, we don't expect a swing short trade setup in any system. Q systems is no different. At all-time high, we don't expect a swing short setup, but day trade short setups are there. And now I am using QQQ using the pivot chart in the morning session. I use 5-minute template. This is the 5-minute pivot chart template on QQQ. What happened on Friday? This is Thursday's close after Nvidia's earning a huge up move of about 3% in QQQ. Next day, it gapped up, tried to go up, stopped right at the early range high, quickly came down, closed below early range low. What did we have? We had a gap short day trade setup. What happened in the daily at the same time? Let's look at daily. On Thursday, QQQ massively went up by about 3% but did not make a new all-time high. DIA and SPY made. And I mentioned in some of the recent YouTube market recaps that when an instrument is close to 52-week high or all-time high, it has a tendency to make that high. After that, it may decide to pull back, may decide to continue to go up, but it has a tendency to touch that 52-week high or all-time high. It did that not on Thursday, but on Friday. Made a new all-time high and then immediately started coming down in daily. Right at that time, it gave a gap short day trade setup in QQQ. Just like in the case of taking the sunset picture, I was ready and I shorted it. I usually do not use naked options, but I always share one exception. That is when I am shorting an instrument at a very high price level, then I don't mind using naked puts because the disadvantage from time decay is more than compensated in my experience by the increase in volatility if the price drops, and price dropped. My risk was this much. The distance between early range low and early range high. The moment it covered the risk distance, I booked partial profit and somewhere during the day I closed the remaining position also. It was a day trade. Again, when an instrument makes new all-time high, there is no swing short trade possible. So it was a day trade setup and closed it with a profit. I used options, naked put options. In a percentage terms, I had a reasonably good profit for a day trade. That is the way similar to taking this picture. I was just traveling on my three-wheeler. I saw the sunset. I hurried to find a way to frame the picture, the sun, and then took the snapshot. Just like I noticed the Hindenburg that came on Thursday. So on Friday, I was looking to short. I was specifically looking to short QQQ because the Hindenburg came on Nasdaq. And when I got that chance, I didn't overthink. I took the shot and I came out with a profit. What about the other picture? when we have enough time to think about what is going to happen and there is probably no other way it could happen, get ready and take the snapshot. There is a situation in Q systems also for that. Let's look at that. Okay, before looking at that, I am on the market breadth chart. Why not I complete studying this chart? It has Hindenburgs on both Thursday and again on Friday. Two Hindenburgs, and if you drill down from the total view to NYSE Nasdaq, I will do that shortly. It came on Nasdaq. Let's look at that view. From the market breadth total view, now I am looking at the market breadth of Nasdaq and NYSE. You notice that both Thursday and Friday's confirmed Hindenburg, magenta color, warnings come in yellow color, that came long time ago. Confirmed Hindenburgs in market came in Nasdaq on Thursday as well as Friday. What did come in NYSE? Bango signals, irrational exuberance or buy everything, even those not of value. The signal was created by Mr. Ian Woodward, may him rest in peace. I use these signals. When the market is showing irrational exuberance day after day, when it is showing Hindenburg clusters in both Nasdaq and NYSE, I don't like to buy. I am buying some stocks, but conservative stocks, not stocks that are already at a very high price level. I don't like to chase them. If I go back to the market breadth total view, you will notice one more thing if you observe carefully. There are a lot of signals in this chart, market breadth, this chart and other charts. I don't have time to go through all of them in the market recap. You may watch the masterclass videos on how to read the colorful signals, and you may pause the YouTube video and study it in more detail. I'm not able to cover everything in every session, but notice one thing: the total view rallied hugely from this low after bingo. Bingo is throw everything, sell everything, even those of value. That is a signal opposite to bango. Again, thanks to Mr. Ian Woodward, may him rest in peace. Market rallied heavily. It became overbought right when, and I mentioned that in the YouTube videos of those times, when the percentage of stocks above 50 MA hit the overbought threshold. That is a very long-term overbought threshold from the entire market perspective. Notice one thing. After that, market pulled back little bit, but market recovered, but the percentage of stocks above 50-day MA is continuing to make lower high and lower low. Market is going up, but percentage of stocks above 50-day moving average is continuing to make lower high, lower low. What does it mean? It means very few stocks are actually moving the market up. More and more stocks are declining, but stocks like Nvidia, stocks like Facebook, stocks like Amazon, they are holding the market up. Unless you are trading only those stocks, and I don't trade those stocks because they are too extended to the upside. That's not my style to buy overbought stocks. Other stocks we have to be very careful about buying because not all of them are participating in the rally. Let's look at dollar index. Dollar index went up from the trend line support in daily and weekly, stopped right at trend line resistance in weekly, pulled back. Now it is stopping at the white and yellow direction lines with a cluster of bullish indecision. There is no buy setup. We have very well-defined buy setups using unambiguous checklist. There is no buy setup, but looking at the cluster of bullish indecision, I will anticipate it to go up. And if it goes up, if you again notice the chart carefully, it will go above all the 5 direction lines, giving us a strong bullish fan out pattern. There is no buy setup, but I think that is more likely to happen now because of the bullish indecision cluster than for dollar to come down. Again, we don't have trade setup, but the indecision cluster helps us anticipate what is going to happen. Remember this picture. Some signals help us anticipate what is going to happen. And let's look at China's CSI 300. It or so. Let me start again. This picture and this chart has a lot in common. In both cases, we could anticipate what was going to happen. In the picture, we could anticipate how the truck was, the pickup van was going to move. And in case of CSI 300, when we saw jump thrust low, price extreme low, and big move up 3, we could anticipate what was going to happen sooner or later. And I mentioned that right during that time in that market recap, that it is more likely than not, with very high degree of success rate, CSI 300 would go up. May not go up next week, but it is more likely that this huge down move would come to an end. Incidentally, it stopped right at the weekly trendline support, displayed a bullish headwind, the unique reversal signal right at the bottom in weekly, and then price went up. And the jump thrust low, price extreme low, came big move up 3, worked once again, tried to come down, displayed a bullish headwind here also, tried to come down once more, a bullish indecision cluster, a false downside breakout, and price went up, went above the high of this day, the day when we had jump thrust low, price extreme low, big move up 3. What does it mean? That means using this signal, if we traded individual stocks that were fundamentally strong, we would make a profit. Even if we traded the index itself, we would make a profit, but individual fundamentally strong stocks in strong industries would have gone up more, we would have made a bigger profit. What would be the preferred instrument in such a case? Because we wouldn't know for the index exactly how many days it would take for price to go up, the preferred instrument would be to use short put vertical. That way time decay would be in our favor and we would have a bigger profit as price has gone above the unique pattern that I mentioned. So that was a case similar to this photograph where we could with high degree of confidence anticipate what was going to happen and take the trade. Both are possible using Q systems. Take a trade seeing something is happening right now and take a trade based on an anticipation of what is going to happen with high degree of certainty. Now the market is overbought from external view. There are Hindenburgs. In internal view, I am not going to buy stocks. In last market recap, I did mention that I bought one stock. Why don't we look at that? APA. That was the only stock I publicly mentioned in the last market recap. I bought on this day. This is what I mentioned in the last market recap. APA an energy stock. At that time, it was stopping at multiple lows in weekly. Weekly had bullish headwinds at that level. It was going up with backdrop bullish color. So 1 week ago, I took the long trade and I mentioned that earnings was coming. If the price had come to the trend line resistance by that time, I would have a nice profit. I would exit the trade. But it didn't go up. This was the day before earnings. And I also mentioned the instrument that I chose in this case, mentioned that publicly, it was stocks. It was not short put vertical. So the day before earnings, when it closed, not with large enough profit, but some profit, very small profit, and earnings was next day, and I had a long stock position, not short put vertical, so not a defined risk position. I closed the trade with a very small profit. It happened to close with a small profit. If it were to close here, I would have closed with a small loss, but that is immaterial. I would not like to hold a stock with long stock position just before earnings for my swing trading. For long-term investment, it is different. For swing trading, I wouldn't do that. So in this case, I could exit the trade with a small profit. After earnings, it came down. Again, that I wouldn't know. I just followed my discipline to close the position before earnings. This watermark support is still holding. This multi-lows in weekly is still holding. If it starts to go up and if it gives me a proper buy setup, remember last time when I bought, it was a proper buy setup. If I have a proper Q buy setup, I didn't check the fundamentals now. If it is still showing undervaluation, why don't we check that out later? I'll check that out later, or you may check that out. I wouldn't mind taking another low risk entry chance in the same stock. That is how, if I have traded a stock and exited it for some reason, in this case because of earnings coming out, I don't mind re-entering the trade. I already know about the stock. I have looked it up. I mentioned, I even know about the reason why it suddenly dropped here. I know the pattern of multi bottoms in weekly, daily. I know about the bullish headwinds. I have done my homework already. If I get a buy setup, I don't have to think too much. I can take a long position again. That was the only trade that I shared in the last market recap. Today I am not going to share any long setup. I didn't take any long trade last week. One trade I took was the short trade in QQQ. That was a day trade. Let's continue with the market outlook. Let's look at very valuable sector industry stock breadth. See, market made new all-time high with DIA, QQQ, SPY, but see the 5-day advanced decline. Of course, this week was a 4-day week. This 5-day includes one more day from previous week, but still, though the market is making new all-time high except IWM, the 5-day advanced decline breadth is bearish for sectors, industries, stocks, both, all of them. So it is not as rosy as the indexes are showing. Why? Because many of these indexes are hugely impacted, disproportionately impacted by the mega caps, which are doing very well. Another reason not to buy every stock, rather I continue with my view of previous week that I am getting ready to short but not yet. Why not yet? Because the trend line supports are not broken yet. Thursday, Friday was bullish, of course, but that is not enough. That was not enough to turn the 5-day period to green. Market analysis not giving any overbought or oversold signal. Overall, the market is bullish. 62% of stocks are above mid Bollinger Band. Bullish but not overbought, not oversold, can go either way. But from other angles, especially from the Hindenburgs, I am very cautious about buying stocks, except maybe high dividend paying stocks that were underperforming. I shared a few of them earlier in market triggers that I bought. Sector industry breadth view is mixed, and if we look at the technical breadth, weekly period bullish across all categories except reversals, but the absolute number of reversals are not so much. The headwind is not giving any bearish alert. Technical breadth is bullish for the week and also for Friday. It's bullish. We could look at some bullish trades if we wanted to, but I don't want to look at bullish stocks because the market is too overbought. That is one reason I give most importance to the market. If the market is so overbought, I don't like to buy. There may be exceptions, but in general, I would not like to buy. But we also know what kind of stocks we don't like to short. In the last market recap, I explained how you could look up the box stocks. Again, thanks to Mr. Ian Woodward, who created this approach based on 5-year earnings growth and last 2 quarters earnings growth. The strongest of the growth stocks are box stocks. One example, let me show you an example of how box stocks can do even in this market. In a market when we are turning from bearish to bullishness at a very low level, box stocks do even better. Again, when we are turning from bearish market to bullish market, if we buy box stocks right at that point, they do much better. But even this current market where market is already very high, at least some of the box stocks are doing very good. Here is one example. Nvidia. Everybody knows about the stock. A stock that reached 2 trillion market cap. My registration is slow, but that's fine. I have meta stock also. Nvidia. Huge up move. Huge up move on Thursday after earnings. Made a new all-time high. I think on Friday it hit 2 trillion market cap. Huge. But interestingly, it came down on Friday, didn't continue the rally. Of course, there is no short setup, but this could have resulted in the profitable QQQ short trade that I took based on Hindenburg as well, because I wouldn't know about Nvidia's down move when I took the QQQ short gap day trade. In any case, interesting to see that it actually closed Friday with a non-bullish shape candle. Again, that is one reason I don't like to chase stocks. On Thursday, yes, it was bullish move after earnings, but I don't like to chase. That would be a good decision. And Dr. Jeffrey, I always watch his videos. He showed one stock recently, I think. Another semiconductor stock. What was that stock? Is it SMCI? Yes. This is also a semiconductor stock. See, in this period, it jumped up. It was already at a very high price level. Jump thrust high, price extreme high, and it was going up rapidly with gap up. Those who chased had a hard, rude awakening when price dropped sharply. And what did we have? Big move down 3. Where did it come? Jump thrust high, price extreme high. it was more likely than not that from here eventually price would go down. Of course, this distance is too high, but you could use the pattern to look for a shorting opportunity, maybe on Friday. Interestingly, it closed Friday with a bearish headwind. No bearish headwind short setup. We have to check the weekly also, but in any case it came down, and I think more likely than not it will go down and close below the low of the day when we had big move down 3, because the selling may not be over in just one day. On Thursday it jumped up with Nvidia's earnings. I don't think it had any reason on its own for to jump up suddenly like that, and that happened with many stocks on Thursday. That was not a day to buy stocks, and right on Thursday I tweeted that the Hindenburg also came. More reason not to buy stocks on Thursday. Not a good idea to chase stocks. Now we saw both SMIC and Nvidia closed lower than the open on Friday, but Nvidia as such had a huge up move, isn't it? Huge up move. $2 trillion market cap. And what kind of stock we don't want to short? This is Nvidia. Using Q Vital, I have generated the scorecard. We don't want to short box stocks easily. We can short eventually, because every high growth stock will eventually come down. Eventually. We don't know when right now, but when we have the proper short setup in these growth stocks at a very high price level, maybe like SMIC, when we have jump thrust high price extreme high and big move down 3, those will actually give very lucrative shorts, because they go up like rockets, and someday for sure they will have to come down like rocks. Come down enough for very profitable short trades. But until we have clear short setups, we don't want to short these stocks. And I came here to show that the box stocks concept is really valuable. For whom? For high growth stock traders. Of course, if somebody is just buying value stocks, then box stocks concept does not help him or her. But for growth stock traders or investors, the concept of box stocks is valuable. Nvidia is a box 1 stock, the strongest category of all the boxes. It just came to my notice when I checked up Nvidia. But again, when I am looking at it, I am doing it live. Interestingly, on Friday, 72% of semiconductor stocks came down. That caught my eye just now. Let's look at the industry's scorecard. Interesting, isn't it? What is interesting about it? Nvidia is a huge winner, 2 trillion market cap after earnings, and see the industry. On Friday, when Nvidia hit 2 trillion market cap, semiconductor as an industry is one of the weakest in score, one of the most decelerating in pace. Not an industry I would like to buy. The industry was actually down. Not only the relative score was very weak, not only was it decelerating, the industry was actually down on Friday. And that is the value of using objective analytics, using extremely reliable data from Refinitiv. However well Nvidia is doing has no relation to my view of the industry. The industry is clearly weak, and I would actually like to short some stocks in this industry, looking at the industry scorecard. And if I said that, why not I look at some of the peer stocks? These are the peer stocks. What happened here? Yeah, these are the peer stocks of Nvidia. Let's see which stocks came down on Friday. There are, wow, I'm doing it live. 31 stocks came down on Friday. Some of them came down with very large percentage, some not so much. Let's see which ones are at least 1 star bearish, that is either overvalued or with negative earnings growth. So we are left with 18 stocks, semiconductor industry. Let's look at their technical signals and setups from QFinder. Well, none of them have a setup. That is okay. We don't have any short setup, though many stocks came down in semiconductor industry, and I notice some of them, exactly 4, are at price extreme high. Why don't I look at these 4 stocks? As I mentioned, if we are able to catch a short opportunity at very high price level, then they may turn out to be very lucrative trades. So let's look at these price extreme high stocks. MRVL, Marvel, reading the ticker from here. Inside a range, inside a triangle. So I'm not going to do anything unless these trend lines are broken. Notice, however, that the the bearish headwind caught the very high. But now I am not able to short. I would not, of course, buy. This is a very weak industry, decelerating industry. These stocks are bearish, 1 star. I'm not going to buy these stocks. I'm going to short, but it has no short technical setup. Next stock, AMD, also has a trend line support, not able to short. CRDO also has trend line support, several of them, not able to short. MPWR, this one looks more interesting. What does interesting mean? Mean that it may give me a shorting opportunity. May, because on Friday there is no short setup. On this day, again the bearish headwind caught almost the very high. I'm not sure we had a short setup or not. We had to look at weekly, daily both. But this is at a price level that is too high, at jump thrust high, at price extreme high, and the industry is weak. The next trend line support is far away. So this is a stock I may look to short if I have a proper swing short setup. There is none on Friday, so I may wait for a swing short setup in this stock, MPWR, or if I have a day trading opportunity, I may take that. MPWR. Okay, let me save that name. When I'm doing all this work, why not save that also, MPWR. Let's see if there was any other stock. No. So none of the semiconductor stocks have a proper short setup now among the ones I saw, but MPWR is most promising, at least worth to add it to watch list that I did. Again, market is at a very high level. I would not like to buy. There are many Hindenburg signals. I would not like to ignore them. So I'm not going to share any bullish ideas. And as I saw, semiconductor industry is weak, decelerating, but because of the trend line supports, it is difficult to find shorting opportunities right now. And that was the conclusion I arrived at when I looked at the market ETFs or futures or indexes too, and also for the market breadth total fee. Because of the trend line supports, it's not easy to find shorting opportunities. So that's no problem for me. I wait. Let's end today's session here. Thanks a lot for attending. I look forward to seeing you in my next session, most likely next weekend. Have a great weekend. And as these live examples show, I hope they show that there is no reason not to do that. Trade profitably. Thank you.